Good morning, and let's get the top 5 stocks to watch out for in trade. Starting with the earnings, nifty earnings coming out today shortly. Dr. Reddy's as well as IndusInd Bank is going to be in focus ahead of its numbers. Other than that, let's focus on the numbers which did come out last evening post-market hours. We have L&T, the infra major also, which reported its numbers, where we're seeing a good growth coming in the revenues, but revenue was slightly below the ET now expectations. Margins were in line, while the profits also were below the expectations. Though overall revenue, when you see a 38% growth coming in on a year-on-year basis, margins seeing a good expansion as well, 10.8% versus 7.6%. Profits actually saw growth of 3.9 times also on a year-on-year basis, coming in at 1,174 crores versus 303 crores. Overall, when you look at the highlights coming in from L&T, their order inflow has registered a growth of 13%. They've bagged orders worth 26,500 crores almost during the quarter as well. And overall, the outlook, they are saying that they've seen signs of pickup coming in economic activity, which has been quite visible for the company. So surely let's keep an eye out on L&T on the back of its Q1 FY22 numbers. Now, other than that, we have the auto company Tata Motors, which reported its numbers as well. All in all, when you look at Tata Motors numbers, revenues were slightly above the ET now expectations, while the EBITDA and the margins were in line. But the bottom line, we were at the profits, what we were expecting, profits or loss. The bottom line, the loss was greater than what we were expecting, a greater loss than what was expected by the street. So revenues, obviously we are seeing a growth coming in terms of the revenues of the company, coming in at 66,406 crore, slightly above our expectations. Margins at 8.3% versus 2%, while the losses came in at 4,450 crores, which was much greater than what we were expecting, though there's a contraction on a year-on-year basis, but the losses have been greater than what was expected. Now, JLR sales revenue was also up by 74% for the company. Overall, the demand has remained quite strong, is what the company has highlighted for JLR, and they booked an order of around 110,000 units. So surely keep an eye out on that. They expect that, the JLR semiconductor supply shortages which we have seen in Q2, that could be in Q2 could be greater than what we saw in Q1. So that is some concern that we do have on the semiconductor front. But other than that, the demand remains strong for JLR, is what the company has highlighted in India PV, while the CV demand is showing gradual improvement as well, and the company will stay strong on the target for deleveraging the business to near the zero automotive debt by FY24. So surely keep an eye out on that as well. Moving forward, we do have Axis Bank also, which reported its numbers, where we're seeing the profits are seeing a growth of 94% on a year-on-year basis. The company's net interest income has actually seen a growth of 11% on a year-on-year basis, and the provisions also on a year-on-year basis are up by 9.8%, so almost 10% increase that is coming in the provisions of the company as well. And when you look at overall the NIMs of the company, that's the net interest margins, that's at 3.46% versus 3.56% on a quarter-on-quarter basis. So surely some focus is going to be on Axis Bank today on the back of its Q1 numbers coming out. And overall, you could say that this time around the net interest income are in line, profits are below, while there is some limited stress coming in on the NPAs of the company as well. So all in all, surely keeping an eye out on Axis Bank. Jindal Stainless Steel also, on the other hand, a strong performance coming in from the company. We're seeing a strong growth in the revenues reported by the company. The margins of the company also seeing a strong expansion as well. You could call it a dhamaka earnings this time for the day as well, and we will surely keep an eye out on how Jindal Stainless actually performs in trade with 193% growth. Company swinged into a profit versus a loss last year, and overall increase in margins as well.